All right, folks. Another very, very easy, kind of sort of easy entry mechanism that comes from one of the private mentorships. Like I think it's like between the 2019 or 2021. I think it's 2019 and 2022. Oh, not 2022, but 2020. One of those mentorships. In which I am a private mentorship student. So we're going to teach you this entry mechanism, which is called, as you see from the title, external. What is it again? External range demarkers. It's a very very weird name. You're gonna get used to saying it, but I can barely say it because I got these things around my teeth. But external range demarkers, two ways it can form: from a liquidity purge or a reference in respect of a reference point or an array. Real simple. Okay. So the liquidity purge part is, let's see if I can find one. Hold on. Kind of sort of happens here. Well, no, both ways actually occur in this same area. Yeah, that's a perfect example right in front of my face. Wow, look at that. So here we go. We got this liquidity purge right here below this low, in which the candle that reverses price, or how can I explain it? The deepest candle wick wise before price reverses away from that liquidity purge, which would be this candle right here. Okay, that's the deepest candle's wick. Okay, before price reverses. See that? Deepest candle wick, in which, as you can see on that candle, price begins to reverse. Real simple. Understood? Okay, okay, just making sure. Because you can have, for example, well, no, if it's the deepest wick, then there's nothing else for price to do than reverse after that point. So it's kind of pointless to say the deepest wicked candle after price reverses. Because if you have a deep wick and it's the deepest wick, what can price do afterwards? It's bound to reverse. So it's kind of stupid to say, but you get what I'm saying. Basically, the candle that has the deepest wick after the liquidity purge, which would be that candle right there. So unless price, well, no, if price kept going, then this wouldn't be a liquidity purge, and it would just be a liquidity run. So I can't really say that either. So again, this is the deepest wicked candle after this liquidity purge. So what you would do, since this is a bullish, hear me out, a bullish external range demarker, okay? Because a bullish external range demarker is using the lower wick or the discount wick, which is this wick right here, and a bearish external range demarker will be using a premium wick or the wick on top of a candle, which would be this wick, that wick, that wick, that wick, that wick. Any wick that's on top of a candle isn't necessarily a external range demarker, but that is what you would be using when an external range marker forms. Get it? Okay, okay, just making sure you understand. So we have a liquidity purge right here, in which you want to get, since this is a run lower into a liquidity purge, in which after a sell side liquidity purge is supposed to run back higher, which is the bullishness, which we're going over a bullish external range demarker. You want to highlight the discounted wick portion of this, of that deepest wick, if I can say it, of the deepest wicked candle after the liquidity purge. You do not apply quadrants to this. Don't. Okay. This is a very, very, very sensitive, but extremely strong. When I say extremely strong, this is like definitely on par with the immediate rebalance. Definitely up there. This is definitely up there with the immediate rebalance. But that equilibrium on this specific entry method is very sensitive. When I say very sensitive, very sensitive. You do not want to include cardinals to this because it's not going to do jack. If you see price starting to go past that equilibrium on an external range demarker, there is a 99.9% chance that price is going to disrespect that external range demarker. I'm just saying that from experience, from back testing and actually seeing it for myself. There's a pretty good chance it's going to run through that. Okay, you understand? Preferably, or for my requirement, if I even want to entry off of this, what I would do is don't even want to see price reach this equilibrium, or even if it does, it needs to barely go past it. Like I'll say, hold on, let me see. I'll give about that much. Like, can you see it? Hold on. I'll give about that much to go past it. That much. But normally and preferably, I don't even want to see it touch the equilibrium. That's what you would normally want to see from the external range demarker, because then that means price really wants to go as soon as it's ready to deliver. It's going to deliver fast with aggression and just basically ASAP. And if you look afterwards, um, yeah, yeah, I don't think I have to. Yeah, yeah, uh, yeah, uh, yeah, yeah. I don't think I have to explain. So this, you can clearly see how powerful it is, because just off of that, you would have gained, because I would have targeted the end. I was going to target the end of that fair value gap. So if you were using my target, and we entered around here, or after it started moving away from it, because with all arrays, from what I've taught you, you want to enter after it actually respects and starts moving away from it, confirming that disrespect. I mean, not disrespect, but confirming that respect and actually showing reaction. So I would probably enter around here and target. Then that's 400 points. Come on, that's probably like, oh, but JJ, that's unrealistic. That's unrealistic. You're on the 5 minute. Duh, go to the 1 minute. Genius. This is fractal. This can be applied anywhere, on any time frame, on any asset that is controlled by the algorithm, which 70 to 80% of all assets are being controlled by the algorithm. So come on, just you get the point. Well, obviously, we're not going to be using this on a 15 minute. If you wanted to, and you're a swing trader and you like taking those higher time frames, that or basically time frames higher than 1 minute and 15 second, then sure, do your thing. But me personally, I'm likely going to be what's the word? Down now in the 15 second, 30 second, and 1 minute. That's just me personally, in which you might be doing the same thing. So, where would be your violation point? Where would you get out at? At the bottom of the wick. Real simple. Right down there. See that? That would be your stop loss. Right there. So, if, like, for example, let's say you got in after it started moving away from it, which is about right there. Oh, I didn't mean to do two of them. Let's say right about there, and you had your stop right there. And, ah, man, this is such a beautiful trade. But I was tired last night. I was up until like 2 a.m. And I think that says 13 risk to reward, I think. Can I get it? Oh, yep. 13, well, 14 risk to reward. I gotta show the risk to reward to ease the 1 to 100 risk to reward people. They're like, "Oh my god, if I have a 1 tick stop loss and I get 50 points, that means I'll have 200 RR." It's the stupidest, bro. Please, I'm teaching you guys to not do this. Not do this technique, but to don't do that, because that's just stupid. You can ask me my RR right now in the comments and my win rate. I can guarantee you I don't even know. I don't, because journaling, you don't need it. I'm a walking definition of how you don't need journaling. It's come on, it's real stupid. Risk reward, you don't need it. Just make sure you're entering correctly and using ICT concepts correctly, and you won't need to worry about that. So I mean, sure, if you want to LARP and flex your RR, yeah, come on, but obviously it's not. It doesn't mean anything. Anyway, I've talked a little too much about that. Let's actually go into some more examples here. This can be ported onto a lower time frame, but I will advise you only port it to a lower time frame. Like if you're using a higher time frame array, like an hour, or what's the word? Like the hour or 4 hour type of array, and you're porting it down to like the 5 minute, 3 minute, 1 minute, 15 seconds, stuff like that. If you're gonna do not hold on, that's one thing I will say. The 15 second is a little too erratic to use the what's the word? External range demarkers. Don't use it anything under the 1 minute. Do not use external range demarkers down there, because you will get destroyed. That's all I can really say. That's a warning, because the 15 second way too erratic. It's just no. Don't even. 1 minute and above, yes. So again, you can use higher time frame arrays to port it down to the 1 minute and around those time frames, but not the 15 second and no second time frames. Period. None. So now that you understand that, I think there was another example right around here at a balanced price range, actually. Yeah, perfect. Here to here. That's your balanced price range. Drag that out right there. Name it balanced price range. Oh, not breakaway gap, balanced price range. We go back to the, I think the 15 minute that was. Yep. And I think, did they respect that equilibrium to the tick? Damn near. Jesus. Wow, look at that. That's beautiful. How much is that? Huh. 4 points. Is that enough? 4 points. Is that enough precision for you? Well, probably is. Hopefully it is. Probably like, oh, JJ, it's not 1 or 2 ticks, so it's not precision. Sorry. Well, hey, the whole move down to reach this was what, 80 points. So I don't know how 4 points could not be enough precision for you, but hey, whatever. You do your thing. So as you can see, we not rallied, but dumped into this balanced price range, hitting its equilibrium, respecting it perfectly. If you're going to, this is why I'm doing this, but if you're going to port higher time frame arrays and use an external range demarker on a lower time frame, that array on a higher time frame must be respected on that lower time frame that you're porting it to. Must be respected. Something like this. Something exactly like this. This is what you want to see on that lower time frame. Not on the because obviously you're not going to be trading a daily balanced price range. Obviously not. So if you're going to use a higher time frame array, you need to see respect like this. It needs to be on point, not on no Slack where you see bodies going through it. No, 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 no. Don't want to see that. Not saying you want to see precise respect, but you want to see it respecting it. It's just come on, it's not a big deal. It's just simply getting your confirmation and making sure that your external range demarker that you're going to take is going to actually work, and you're not trading some low probability BS. That's all I'm trying to do here. That's all I'm telling you. So since this is the deepest wick that reached and referenced and respected the what's the word? If I can get it, hold on, I'm trying to get it. That respected the bounce price range. I'm having such brain fog. You obviously want to get that same wick that we did with the liquidity purge over here, right there at that low. Put the equilibrium on it, and as you can see, it references the external range demarker. Bang, does not hit the equilibrium. That's a good thing. Jumps to the roof. Whee, and it keeps going. Very, very simple, right? Now, preferably, you want to use, you want to find the wick and use a PD array on the same time frame. Meaning, since we did that liquidity purge on the 15-minute, or use a liquidity purge on the 15-minute and use a 15-minute wick or the 15-minute deepest wick, that's normally what you want to do. You want to keep it in sync and keep it on the same time frame. But if you don't want to, if it's just no opportunity there, you can use higher time frame arrays. Just make sure they get respected. Kind of like this. Not exactly like this, but make sure just make sure they get respected. Okay, you know what I mean by that. I've taught you very, very well, and you understand what I mean by respect. So just keep that in mind. We're gonna go through does it say 13 minutes? Or what does that recording say? That's the thing. I've been talking for 13 minutes. Doesn't feel like it. Feels like 5 minutes. Anyway, let me find some examples for you. All right, we got an example here. Some people are like, "Oh my God, is that an inversion? That's an inversion for why you got book right there." Like if I draw it out and like, bro, they love the invert. Oh my God, it's so funny. I've been seeing so many Instagram traders or Instagram LARPers or whatever you want to call it, live action role play people. They it is so funny. I'm sorry. It's just I've been like going back to the TikTok feed. I mean, not TikTok feed, but the trade talk as people call it. And it is just so funny because normally I'm not even on there. I don't post any videos like that, just mainly on YouTube to teach you. But here we go. This fair value gap here, as you can see, jumps up, does an entry drill. Pretty nice. We see the respect there. Preferably, you want to see respect of the array that it references. Preferably. Well, I would say as a requirement because I love confirmation. Me personally, I'm a very, very analytical person, so I love confirmation, in which this is my confirmation. It's respecting it, and it causes an entry drill of the fair value gap, which is pretty good. So the deepest wick that references up into it would be this premium wick right here, right there. I'm going to try to show some examples of price kind of like delaying the creation of the external range D mark. I'm going to show that in a minute, in which you're probably like, oh my God, JJ. Well, let me delete this in the back. Oh my God, look, JJ. It went past it. Why did that happen? It went past it. Yeah, that's you normally don't want to see that. But if you do see that, just wait. Wait and see what price does. In which, look at the bodies. Look at that. Bodies close below it. And then you see price dump. Dumpity dump dump dump. Pretty nice. Yeah, very, very nice. So if you do see this happen, just wait. Because you might be able to still enter. But preferably you don't want to see it hit the equilibrium, or you can see it hit the equilibrium, but preferably you don't want to see it. If it does touch it, there's a pretty good chance that it might shoot past it just a little bit. And even if it does shoot past it, 99% of the time, it's supposed to run through it. But that 1% might just give you a little bit of, what's the word? There's a certain word that my parents use. Um, you get the point. It'll basically give you a second chance, or like kinda like a, final offering before it's finally delivering. I couldn't really get the word. It's a certain word that my parents use for, whenever they're gonna give my little sister a chance, but I forgot what word it is. So here we go. I think we have another example. Yep, another beautiful example. Right there. Drag it out. Mitigation block. As you can see, this is the deepest wick that's created when it's when it's referencing this mitigation block. Obviously, get that wick. Boom, bam, pow. Does not hit the equilibrium, as you can see, drops down, you shoots right back up higher. Bang. Beautiful, isn't it? Yeah, I know. Very, very, very beautiful. Amazing. Just pure bliss. I know. In which we do have another mitigation block right here, in which if you look at the wick, boom, bam, drag that out. As you can see, it touches it barely. Like if you look, you probably can't even see this. If you're on the phone, let me zoom it up for you. But as you can see, that wick touches down into it right there. Can you see it? Drops down, goes into the wick's range. jumps higher. Bang. Nice, right? Of course, you're not going to be trading at what 8 o'clock. You're going to be waiting until 9:30, but you get the point. It's still respecting it, and I'm showing that the entry mechanism actually works because I'm not going to steer you wrong. Because of course, why would a private mentor and not private mentor, but a private mentorship student and a charter member show you anything wrong? Come on, I've been in this game for 4 years now since I was 11, so yeah, just take it from me. Let's see here if I can find. I want to find a weird example that actually looks okay. This is kind of sort of weird, but not really. This isn't really that weird, but for example, right? This is oh yeah, this is a weird example. Yeah, yeah, this is weird. Okay, you see how we referenced this order block right here? See that? Bang, see that right there? If I can even get it. Okay, we referenced the order block, but look at this. Looky here. You see how this candle here, right, references up into it, has a wick like this. Would you use this wick? Yes or no? If you said yes, you're incorrect. In which you're not totally wrong because I didn't say why at the beginning of the video. The reason you won't use it is because it's not that long. Because if we apply the equilibrium to it, look, it's barely anything. So you want to see a decent wick when referencing it. So you're not going to be using this one, and you're not going to be using this one. Why not this one, JJ? Because there's a deeper one that goes deeper into the order block. So instead, we're going to be using this one, in which it never referenced it, sadly, in which not I'll say, but once it's delivered away from the referenced array that creates the external range demarker, like once it's displaced away from it and exhausted the array, the external derange marker is no longer there because the array is no longer there either. Understood? So if it references the array but never references the external range demarker and just displaces away, exhausting the PD array, this external range demarker and order block are gone due to array exhaustion. Real simple. Okay. Let me see if I can find anything else. I might not edit this recording, honestly. I don't think I'm gonna edit this. I don't. Let me see here. Hold on. I'm trying to see here. Hold on. Trying to say. Okay, we do got a mitigation block here in which that example does get referenced. It does get referenced. Hold on. In which I'm pretty sure you can see it clearly. But I want to find like a weird looking example. But I feel like if I use a weird example, it might confuse you in the future, and you're trying to like decrypt how to actually use it. So I think I'll just teach it a proper way, in which I already did. So this is the end of external range demarkers. Real simple and very powerful entry mechanism, as you've clearly seen. I'm so tempted to find that weird example, but I just simply can't find it. So I guess you can keep the proper way, and I'm not going to show you the weird way of using external range demarkers because there is a different way to use it, in which I might just make a section 2 dedicated to the what's the word? The odd scenarios or just the weird looking scenarios of external range demarker creation. But until then, this is the end of external range demarkers, and I'll see you in the next one. Good luck and good trading.